please follow us on Instagram. You might learn a thing or two. So I just want to look at S&P 500 today, strictly S&P 500. Okay, strictly S&P 500. So I'm gonna start looking at it on monthly. I want to see what's happening there. There we go, guys. There we go. I think everything's clear that side. I hope you guys can hear me. Let me check my audio mixer. Hello. I'm sexy. I don't think you are sexy. I'm sexier than you. way more sexy. Okay, I think it's working. Sorry, I was just testing the mic here, folks. So today I'll be looking at S&P 500. I want to check if you are a strictly silver bullet trader, if you were gonna make, if I was gonna be able to find all three of the silver bullets in one day. By three, I mean the silver bullet from the morning, which is, let me just do this here. Which is London. Then there's another silver bullet for New York AM. There's another silver bullet for New York PM. So I want to check today. I'm just doing that. I'm just back testing to see if I was going to be able to find all of those in one session. Okay, so we have S&P 500 as our instrument, and I'm just going to start on monthly. Because normally that's what I do every day in the morning. If I'm going to trade the London session, I go back to monthly to check and see what price is likely to do, or where is it gravitating to. The monthly candlestick, where is it more likely or most likely to expand to, in terms, is it gonna go higher or lower? So here on monthly, I see that we went down to this buy side imbalance, sell side inefficiency, meaning, sorry about that. We went down to this to fill this fair value gap, monthly fair value gap, and then we filled it right there. Look at the candles respecting this. Respecting the fair value gap. Yes, the wick, my can color, and you can see that it was just it reached for this bullish order block here on monthly, and then from there we went to the premium of this here and returned after hitting the bearish order block there. I hope you guys can hear me. I hope I'm audible. I hope I can, I don't know, the guys on the Zoom session, please send me a chat if you guys can hear me that side, because I'm also hosting a Zoom. Just write on the chat box there if you guys can hear me. I don't wanna talk, keep teaching when no one is here. So I'm just gonna guess that if the guys on the Zoom session can hear me, you guys on YouTube also can hear me. Please type on the chat box if you can hear me. You can give me a 5 by 5. Give me a 5 by 5 if you can hear me. Okay, no one is responding. No. Okay, there is a 5 by 5. Danke, bro. Danke for my show. What up? So there is this bullish order block on monthly that's pushing price to go higher. I see that. So I'm just gonna put this here at the center. We have this bullish order block. I normally put it on my far right like that. This is a bullish order block and the fair value gap. So we went higher. Now we left this inefficiency after hitting this bearish order block here on monthly. Now this here, this is a bearish order block on monthly, right? Sorry about this. So this is what's sending price lower, right? Where is our draw on liquidity on monthly? We have this inefficiency, right, which is in a form of BEC, buy side imbalance, sell side inefficiency. So I'm just gonna make this bold, because this is also this is the low, this is the monthly BC low, right? So I'm just gonna put this on my far right here. This is the monthly BC low. So I want to see how price reacts after hitting that on my smaller time frame. So normally this is what I do every day. I'm gonna say this, and I want you guys to write this down. We have London. I trade sessions. So I have London open, which is from 2 to 5, and then in between that I have a silver bullet hour. Basically, a silver bullet hour is an hour where price will just change sentiment, or it's when it has already changed the sentiment. So there's a fair value gap that you're going to find in displacement, and price will already be going towards the direction that it wants to go to, gravitating towards the drawn liquidity on a high time frame, or it's during during that hour it's gonna change sentiment, and you're gonna find the fair value gap. Definitely, it's always there. So that's what I want to show in today's lesson. I'm gonna look for it, and I'm gonna show you this is what I'm talking about. This is why it's like this, and you always find it during this time. So that time is 3 to 4 a.m. and of course I'm always using New York local time, right? I'm not using South African time. So what I want to see if I can find a silver bullet during the London Open, which is 3 to 4 a.m. Silver bullet hour is 3 to 4 a.m. And then I also want to check if I'm going to find a silver bullet between 10 and 11 a.m. New York time. That's a New York AM session. And then I want to also see if I can find a silver bullet between 3 and 4, right? 3, that's a 2 to 3. 2 to 3, sorry, 2 to 3, that's a PM session. 2 to 3 p.m. you'll find a silver bullet there. So that's what I want to see. I want to see if I was trading S&P500 today, I want to see if I was going to find those setups. So this is what I was going to just take from this time frame, and I'm going to expect obviously a certain reaction, right, once we hit this low here. And I can see that we hit it this month. I don't know if it's today or yesterday or what. So let's go to a weekly time frame and see what price is telling us there. So I can see that we broke this low with a displacement showing more willingness to go lower, and the drawn liquidity is obviously this fair value gap now on weekly, right? So what I'm gonna do is I'm just gonna adjust this fair value gap to here. This is the weekly, right? So now this is the weekly, this is the monthly. It was a monthly fair value gap, but it's like up here. So I'm just gonna take this weekly now, just gonna adjust this and put it here. I want to see a certain reaction once we reach this fair value gap, right? So I think this week we hit it because this is the week. So I want to check, because today was Wednesday. So I want to see if we hit it yesterday or today. So let's go to daily. I want to see if, but as you can see here on weekly, right, if you are looking at the price action on weekly, let me just zoom. I think my music is not getting loud. I need to reduce it a little bit. There we go. There we go. I think the volume is good now. So if I'm looking at what weekly is showing me here, right? I have a couple of PD arrays. This is a discount array. If I'm looking at the swing low here and the swing high there, if I were to measure this, okay, let's just remove this 20%. Let's leave 50% like that. So it's below equilibrium, right? Below equilibrium, I have this inefficiency, and it's the only efficiency down here. Here we have an inefficiency here in the form of a BC, but we traded through it and it was filled, as you can see here. Almost completely filled, but we have this order block which held price there, and then we rallied higher. So I think the point of retracing, or maybe this was the drawn liquidity on weekly, no doubt. So this is what I'm gonna do. I'm just gonna annotate this. I'm just gonna extend it like that. I want to see how price reacts after hitting the low of this here. Let's do this. So this is the weekly. That's not how you write weekly, bro. It's not how you write weekly. I know. This is the weekly. BC. Let's put this in. All right, so this is the discount. So price always trades from premium to discount. Where's the PDRA? Once the PDRA is satisfied, then we go back up to premium. That's what we always do. And here you can see now the new premium. You look at this new price leg. If we turned here, right? If this is where we turned, we have this new price range, and this is the equilibrium. At premium, we have this order block. You have a fair value gap right there. So once you satisfy this, I anticipate price to go back to this, and then from there I will look. It will depend how we trade after hitting this premium PDRA, which is a bearish order block, weekly bearish order block. I would want to see then how we trade after hitting this. Then I'll look at the candle. How do we close? Do we reject from hitting this, then maybe leave a wick and then show willingness to go lower? Then I would consider it taking this low and moving further down here. But for now, since we have filled this fair value gap on weekly, going into today's price, or this week rather, once we satisfy this weekly BC, I'm going to anticipate price to now move higher. So let's go down to a smaller time frame. Let's go to daily first, and see if I was gonna trade London. So on daily, you can see that we also have this fair value gap, right? And we have this order block which we hit today, because now this is daily. We hit this bullish order block. We also feel this fair value gap in the form of a BC, and also this one here, the small buy side imbalance, sell side inefficiency. We hit that, and also this is the monthly BC low, right? You remember that? Okay, fine. So let's go now to 4 hours and see. I want to go to the sessions now. So from here, I'll just go straight to maybe 15 minutes or even 5 minutes for today, right? If I want to go to today's price now, I want to see how we open. So this thing, you can see that this is today, right? You see this is a session break. This is Tuesday, and once you cross over here, this becomes Wednesday, right? So what I want to do is I wanna because now this is today's price. I want to see today if I was gonna find a setup here in this dumping here. So what I was gonna do, once we hit the low of the monthly BC, which we did here, and this weekly, the low of this weekly BC, I want to see how price reacts after hitting this. So we generated this sell side before hitting this two, which is weekly BC low and the monthly BC low, right? We generated sell side, and then we took it. We also generated another sell side here, and then we took sell side. Then we created a bullish market structure shift right there. And then a low risk buy would be this order block on this fair value gap here. I don't know if it's visible that side, but I want to see what time is it. So normally this is what I do. I want to take previous day's range. The previous day's range is visible here. We have yesterday's previous days. This is previous day's low. Sorry about this. Let me remove this. Okay, so this is previous day's range. We have previous day's high here, and then this is previous day's low. So this is external liquidity now, because it's liquidity outside of yesterday's trading range, right? So this external liquidity is in the form of PDL. This is what, if you look at my charts and you see PDL, you must know that this is previous day's low. So we took previous day's low, which is sell side. So I'm just gonna write PDL. Okay, what time was it? So now I'm gonna go and annotate my Asian session. I want to see what happened during the Asian session, right? So we have this from 8 to 12 New York time. You have Asian session, right? So you have an Asian session. Okay, let me remove this thing, yes, because it's irritating me now. Okay, someone is sending me. Sorry, I was just replying to one of my students here on WhatsApp. She's coming from work, so she wanted to join the meeting. I'm telling her that I'm just gonna record for her. She don't have to worry. So this is this is Asian high, right? This is buy side, and then this is the Asian low. I'm just gonna annotate everything. Look at the relative equal lows that were generated before we took sell side, which was the low of this thing weekly, and the monthly BC low. We generated sell side here, and this sell side is in the form of Asian low. These were Asian lows, so I'm just gonna say Asian low. So remember, I'm now looking for higher prices since we were at discount. You remember that, right? Don't forget, folks, you must always keep that in mind, because that's how you get a bias, right? So we have Asian high here. I want it to be at the top, and then I want to annotate my midnight open. I want to see where's my midnight open. So here, right there. I'm just gonna extend that out because it's gonna help me to see if I'm buying a discount or premium. So normally I want to buy below the midnight open because price is a discount, and I want to sell above midnight open. But it will depend if I'm adding on a position or it's my or if I'm pyramiding the position, or maybe it's in the form of so I'm now going to remove this rectangle here because I don't want to have, it's too much for my liking. I don't want to have like a dirty chart, but because of the purposes of teaching, it's fine. I think I'll have a dirty chart for today. So I don't want to have too many things. I don't want to end up confusing you guys. So remember, the London Open is starting from 2 to 5, so I'm just going to have vertical lines there, 2 to 5. I recommend you do the same thing when you're trading, and then I'm going to have 2 vertical lines for 3 to 4, which is my silver bullet hour. So I'll just write here so I don't forget. This is my London. This is my London Open. I'm just gonna make it bold and blue. I love making it blue like this. So this is my London Open. I hope you guys can still hear me. Let's make this one. Okay, there you go. And then I have my silver bullet hour here. I don't want to forget it, so that I know what I'm looking for. And when silver bullet silver bullet hour. Okay, there we go. Let's make that one black. Okay. Okay, let's just leave it like that. Silver bullet hour, I think, yeah. The spelling is wrong. I know, folks. Okay, I know it's right. Okay, so we took sell side here. We took Asian low. We also took out this external range liquidity, which is in the form of previous day's low. This is a strong model, guys. This is what I always trade when I'm trading the London. This is my model right here. I just wait for price to take out Asian low and previous day's low. Then from here I wait for the model, which is here, visible here. I'm just gonna go deeper, guys. I'm just gonna explain everything to you like I'm explaining to a 2-year-old. You look here, this is the model, this is the 2022 model. We took sell side here, right? This is sell side liquidity. This is a three drives pattern. We took 1, 2, this is the third sell side liquidity. This is another model on its own. It's called the three drives pattern, something like that. You don't expect price to take the fourth sell side after you see this here. We already took sell side here, and we also took sell side here. After this, we created a bullish market structure shift. We just took out the most, we just filled the most significant, let me just bring this to front so that it doesn't sit, because this is the most significant level in price. This is the monthly BC low. We just hit that on monthly, and on weekly we also hit the low of the BC. On weekly we took out Asian low and also previous days low, and then now we created a bullish market structure shift. Look at the time, guys, because that's the most important thing. So we have what? Bullish market structure shift. Yeah, I think this is gonna be the best silver bullet lesson or class. Let's put this on left, and then you see this market structure shift here, right? You remember this is what? This is still London. This is London open now. This is a kill zone, and you look at these things, they happen exactly during that time. This is 2 to 5, right? And you have a silver bullet hour here. Man, come on, man. Let's go to 1 minute and see if you don't find a fair value gap at discount of this price range, which is going to be your silver bullet, right? So we go to 1 minute. We go to 1 minute, right? So I want to show you how this was gonna feel like, or how this was gonna look like when you were trading this. On 1 minute, there is no fair value gap per se. Okay, there is one here, a small one, but I liked the order block on 5 minutes. I think it was just super cool. For me, I was gonna take the order block on 5 minutes, or even this one here. If there is no fair value gap, you can even take the order block like this one. This order block here, this was gonna be my entry. Stop loss, this is a low risk buy for me because stop loss is just below this low here. I'm not expecting this to take this low. We already took sell side 3 times. Asian lows, previous day's low. What more do you want? And this is during the kill zone. This happens during the kill zone, more especially during this hour here, 3 to 4, which is the silver bullet hour. If you look here, folks, fair value gaps can be traded into twice. That is absolutely permissible. So this is your silver bullet right there. This is your first silver bullet if you want a fair value gap to be your entry. But this order block for me was gonna be enough because it is also giving me a tight entry. You see? So this is your first silver bullet. You can get another silver bullet maybe on 3 minutes. I don't know. It'll then depend it'll depend on you. If 3 minutes is cool with you, you check an entry on 3 minutes. But even on 3 minutes, the order block is still there. You either wait for that or the bus is gonna leave you, bro. You might get an entry up there, like I think this one here. This is still silver. We can say this is silver bullet. Still permissible because a fair value gap that's created during the silver bullet hour, even if we trade back inside it after it could be after even the London Open, like maybe let's say we went up, and then we retraced back inside here, outside of the kill zone. It could be even outside the kill zone. It is still valid. So here we traded back inside the fair value gap here, but it was no longer silver bullet hour. It was now just 3, 4 to 5, which is still London Open, because London Open is from 2 to 5, right? So this is still going to be a good silver bullet. And if you look here, you have a breaker even. So with this breaker and this, you don't expect it to come down here, right? So you expect this to be your breakaway gap, because you have a breaker that's holding price right there, right? You have a low, a high, and then you have this lower low, and then a higher high there. Once you trade back, look at that. Maybe I should just highlight it. My mouse just ran out of the fuck this mouse, man. You have this up close candle here, and the week for this, the CE of this here, the fair value gap, which is your silver bullet. Let me highlight it. Guys, my mouse just ran out of battery. I didn't charge it for like ever since I bought it, and it's been telling me that I should charge it. Now I have to use this laptop, what do you call this? I have to use my one on my laptop now. It's gonna be, but I know, I'm not complaining. I'm gonna use what I have as always. This could be a good silver, but you see that the fair value gap now is too huge for you to risk silver bullet. But yeah, you can still call it silver bullet. It's still silver bullet because it's a fair value gap that was created during the kill zone, the silver bullet hour. Sorry. So you have this CE on 1 minute. I'm not gonna have that on my chart. I don't wanna mess it up. I don't wanna have like and then from here you can even target the Asian high. You can target the Asian high. Where is my thingy? There. The Asian high with this model, yeah, this model is very strong, guys. You don't have to have a bias if you see something like this here. It's very strong. In most cases, it will go even if you are bearish. If it does this, we take our previous day's low, Asian lows taken out, and then we create it during the kill zone. We create such a price prints the model like how it did here, bro. You can target any low hanging fruit, but you must hit hard. Okay, don't risk too much, but I hit hard when I see this. Yeah, this is the gospel. This is, if I'm gonna be trading London, this is what I want to see. It could be previous day's low or vice versa. Maybe we took out previous day's high, we took out Asian high, and then we created the model during the silver bullet. There is a fair value gap. That's mine, always, all the fucking time. I'm eating there. I'm having breakfast for sure. And as you can see here, this was going to be a beautiful trade. You take out Asian high, you got a silver bullet entry. Beautiful. So that's your first silver bullet. All right, I'm already bullish for the whole entire day. So after silver bullet, I will anticipate a retracement to take out the lows that were created when buyers were making money here. So there are stops that are trailing here. You got stops here, you got stops there, you got stops there, you got stops there. The people are trading stops. So now we are going to New York AM. You want to see if price is going to continue higher, right? Because you are now bullish, because we just satisfied the monthly draw on liquidity. We just filled the whole fair value gap on monthly. You're now expecting higher prices, right? So once this is what I do. I want you guys to write this down. This is what I do when we just, if I'm no longer in a trade, right, But this I was gonna hold for the whole entire day, right? This trade here, I might kill trades that or maybe were taken maybe somewhere here, maybe leveraging. I might kill those ones, pay a trader, and leave the initial ones if I'm bullish for the day. That's what I'll do, because this one is extremely a discount. Like, if I'm bullish for the whole entire day, I'm leaving this one. This is gonna be my runner. Okay, it's gonna stay there until New York PM, right? So this is what I do outside the kill zones. When it's either I go to gym, even if I come back from gym, what I'm gonna do first, I go to like 1 hour or any hard time frame, could be 4 hours, to check if there's anything that I might use when I come back, because you see it's gonna leave fair value gaps and anything that's gonna help me when I'm trading the PM session. So I want to check the PDRAs on like 1 hour. So here, this was after we reached for the Asian high, and then when I'm coming back, I want to see if we left any fair value gaps that price might retrace back into, and then I want to once we come back during the Asian session, if I'm still bullish, the New York session, if I'm still bullish, I want to see price respect those. So here we have this order block, and you have this fair value gap here, which is exactly what I want. And I'm looking here, we also have this inversion fair value gap, and this inversion fair value gap and this fair value gap, they go hand in hand. You see this low of this fair value gap here, and this fair value gap, it's inside this fair value gap. So this is a strong, this is what you call BPR. This fair value gap here didn't hold price, we traded back up. Let me just do this here so you guys can see what I'm talking about. I'm looking at this fair value gap here. Price left this fair value gap, it went low, traded back inside it and above it. So this now should act as an inversion fair value gap, and I have this fair value gap here also. Look at that. So this is strong, and you have this bullish order block inside the inversion fair value gap, and it's inside the fair value gap here. This is a strong support level. Let me just do this here. If you're already bullish, any retracement back inside here is a good buy. So this is what I do. I zoom out when kill zones are done. I zoom out. I want to get as much information on the higher time frame as possible. So here you can see we have this bullish order block, and we have this 1 hour. I'm just gonna say H1 inversion fair value gap. I'm gonna leave. I don't want to have too much on my chart here, so I'm not gonna annotate this one, but it's on my mind as well because we have sell side here. So when I go back to a smaller time frame, let's say the kill zone now is time for the kill zone, right? Being bullish doesn't mean I'm not gonna entertain sells, right? Because I know what I'm looking for. But sometimes if it's not so clear, I just leave it. I'm not gonna take a sell if I'm bullish, if my bias is bullish. So we come back here at 8:30. So 8:30 is when the algorithm starts the hunting. So at 8:30, what you wanna see is you wanna have like the obvious high or low on 5 minutes or 15 minutes, and then you wanna see price purging that and then creating a bearish or bullish market structure shift, and then from there you can take it to any low or any high that's visible. Sell side, basically, that's opposite. Okay, so 8:30 here, you have 9:30 here, and then you have 10 and 11, which is 9:30 is when the easy equities market opens. So that's why you must have that on your chart. And then you have 10, and then you have 11. So 10 and 11 is the silver bullet hour, right? So these are the 4 lines that I always have on my chart when I'm trading the New York AM session, which is this session here. the one that I'll be teaching right now. So this is New York. This is New York AM session, right? And then we have a silver bullet hour here. 10. This is 10 and 11, right? This is the silver bullet hour. So I know what I'm looking for in price. This is silver bullet hour. So the Zoom is gonna end in 4 minutes, and exactly 4 minutes. I want you guys to join on YouTube, please. So I have this silver bullet hour, right? So at 8:30 we have this high, which is the high from this is what we call this London lunch macro, London macro. You can call it the London macro. Basically it's time from 5 to 8 on indices. 8:30, that's the London macro. And you also have the lows that were created during the macro, which is sell side. So if you are bullish, you are anticipating price to come back and take out these, so that buyers that are making money, the trailing stops are pushed. So when we are continuing up, these guys are no longer part of the game, right? So that's what you anticipate. And there's a lot of fluctuation, there's a lot of volatility between the times of 8:30 and 9:30, right? Because at 9:30 you got equities. At 8:30, sometimes, most of the time, we have news at 8:30. So at 8:30 here, we opened, we took out the high here, and we created a new high. This is what I call an 8:30 high. This is the most crucial one. This is the one that I pay more attention to. I just call it the 8:30 high. So it's the high and the low that's created between 8:30 and 9:30. If I'm gonna be trading the silver bullet, I wanna see price take out that low or high that's created between 8:30 and 9:30. If it didn't create any high, it just went and took out a new low. Like for instance here. Let me show you. But let me just write this as the 8:30 high, right? This is very crucial. So you have this 8:30 high that took out buy side here, right? So you had buy side, and then this 8:30 high took it out, right? And then it came low, it came down here. It didn't create a clear bearish market structure shift, even though it traded below these lows here, right? But it came back up. You can say it created a bearish market structure shift, but with the way it traded below these, I wasn't gonna entertain this. I was just gonna watch it, because also there's no fair value gap for me. Maybe there is on a smaller time frame, but I don't like this. Not a fan. Maybe if we broke below this low here, then I was gonna entertain it. But again, I was gonna want to see it trade with impulse. I wanna see displacement going low. So we came back up, we took out the 8:30 low, right? So when we took out the 8:30 low at 9:30, this is a Judas swing. At 9:30, in most cases, that's a Judas swing. It's a false move, it's a trap. That's not where we are going. We are going in the opposite direction, in fact. So this is what, and you are already anticipating price to take out these lows, and then you see this at 9:30, take out the 8:30 high, then bang, bearish market structure shift right there. Now we are in the silver bullet hour, right? This is a bearish market structure shift right there. This is a clear one. You see how it closed below the lows here? That's what you want to see. This is what you want to see. This is a bearish market structure shift. This is what I entertain. Even though I'm bullish, but I can hit and run. Okay. And there's a fair value gap. This is a sweet spot. This is what I call silver bullet. You look, okay, if I enter here, do I get like 10 handles? And you have these lows here, relative equal lows, right? And also this bullish order block here, which is also a draw on liquidity. So you have this, can take this one, or if you want to get like a bullish entry, you can wait. The fair value gap that's going to be formed here is still valid even after, so you don't have to stress if you want to be bearish. If you have a bullish bias, it's fine, you can do that. You can just wait and entertain only, because sometimes I also do that, in most cases in fact, unless there's a clear. This is we have now the second silver bullet of the day, which is the New York AM silver bullet, right? Let me just write this, deem this as the London AM, London silver bullet, because that's what this is. London silver bullet, right? And then this is the New York AM. This is the New York AM silver bullet, right? Let's make this white, and also this one here. Sorry, it's visible. There we go. And you target this low and these lows here. This is your first low hanging fruit, bang, and the lows here. This is the lunch hour. This is London macro sell side, and it's also an inversion fair value gap on 1 hour, and a bullish order block, and as that inversion also on 1 hour. You are expecting this, and then you wait. You take low hanging fruit. You're not expecting to go deeper than that. You have these PDRAs on a high time frame, right? And then after hitting here, you want to see how we trade back up, displacement, and then it comes back here. This is a low risk buy if you want to buy, man. This is a low risk buy here, this order block here, because after we hit the bullish order block and this, we went up like crazy, created a bullish market structure shift. I'm sure it's more. Let's go to a smaller time frame and see if there's a fair value gap down there. That's a silver bullet, a second silver bullet in one session. There's nope. Let's go to 1 minute and see. But you need to be quick on trading these. There's a silver bullet there. So you have 2 silver bullets in opposite directions in one session. There you go. If you want a bullish one, there you go. You got it. Because trading this thing up and down is not for newbies. I'm not gonna lie. It's gonna take some time for you before you are able to. Silver bullet. This is AM. That's not how you write AM. You must put it in front. Okay, AM silver bullet. There you go. So you have this one going down. You also have this one going up. You have to understand that you have to have a narrative, guys. You have to have a narrative, and I showed you how you get a bias from narrative, right? The narrative was that you're already at discount on monthly, and you're already satisfied that with monthly draw on liquidity, and you're expecting higher prices, right? That's the whole game right there. And then you know what comes before price is time. So it's time and price. At the right time, you want to see certain things. You are not entertaining this sell because you are expecting higher prices, right? There's your buy there. After hitting, created a bullish market structure shift right there. This is your fair value gap, but this is a discount fair value gap. You want to buy discount. I'm saying discount because it's discount if you are looking at this price range here. This is the equilibrium part of this. So you're looking for a PDRA or an imbalance below equilibrium, and you have this discount fair value gap, which is your silver bullet. Let me bring this to front so that, yeah, there we go. Bang. This was a good trading day, man. S&P500. You are done with this session. Done. What you do after the session, you zoom out. If 15 minutes, 1 hour, 4 hour. Let's go back to 1 hour. Let's go back to 1 hour before we come back for this. Okay, sorry, what do you target when you entering this trade? You low hanging fruit. If you're bullish, you can even be overzealous and aim for that buy side there, right? That's your buy side liquidity right there. Because you are bullish, you can take that, and that's a New York AM high, right? What you call this? Yeah, you are aiming for New York AM highs. Let's put this at the top there. Let's make this bold. I know it's right. You're targeting the New York AM highs there, and you also have these low hanging fruits here. Killing trades right there. Look at how the up close candles, look at how impulsive they are. It shows that the drawn liquidity now is now to the upside. I'm not sure what that is yet, but we have satisfied the drawn liquidity at discount. Now we are moving higher, right? So that's it for New York AM. You got your silver bullets there. Let's go back to a high time frame. 15 minutes, 1 hour, any bigger time frame than the small ones. The small ones are for entries. You are looking for entries, you zoom in after the kill zones or whatever. You then zoom out to get a bigger picture. What do you have now? So that when you come back for that session, you have something as a base. You need to have a PDRA on high time frame first before you consider that market structure shift on 1 minute. And the market structure shift on 1 minute, it has to be in line or in alignment with the narrative, right? That's why you're entertaining that market structure shift on 1 minute, is because you are framing, you have a narrative that we want to see this in price. So if you come back here on 1 hour, you have a new bearish order block here, but you can see that and you have this huge CB. Let's go to smaller time frame, like 15 minutes, and see if we can find something there that's more clear. You don't want those big candles, but you can see this is the 1 hour bullish order block, and then on 15 minutes you have this fair value gap here. There is a fair value gap here. Okay, let me just do this here. There is a fair value gap, it's there. Now you have something that's tangible, right? A high time frame PDRA. You have this fair value gap and this 1 hour order block, right? If you do traces, you know this is the short-term drawn liquidity. So I'm just gonna, I like an order block with a fair value gap, guys. That's a strong model. That's a strong model. This is a BC on ish. Let me use small letters here for 15 minutes. Okay, there you go. And then you have this 1 hour. You wanna see, I'm not gonna extend this, guys. I don't wanna have so much on my chart. You wanna see how price trades after hitting those on retracement, right? Because you're expecting higher prices. You're still bullish, guys. So on a smaller time frame, like 5 minutes, you see that there's another one here, and there's this beautiful order block. This is also nice. You can take this here. This is more clear. You have this bullish order block and this fair value gap. You can now consider this one, because this one is a discount. You're just having this, and also you can have even this one here. What you want to see is how does price trade after hitting either of them. It could be this one, it could be that one, it could be anyone, but this one, all the ones with an order block. And listen, guys, this is what you want. This is what you don't want to see. If you have an order block like this here, and if you're bullish, you have two fair value gaps like this. You have one up here and you have one below here. If you are looking at this order block, right, this order block is from, there we go. If you are bullish, this is a premium, right? The fair value gap, these, okay, in this case, both these fair value gaps are a premium of this order block. But you don't want to see, what you don't want to see is, you want to see price reaching for the discount discount fair value gaps that are in this, inside this order block. You don't want to see price reach for discount. If it does, we want to see it an institutional order flow entry drill inside that fair value gap. You don't want to see it reach like for the CE of, you don't want to see price reach for the CE or beyond that. If you are bullish, if you're extremely bullish. So here you have two fair value gaps, one at the top, which is a premium, and this one is more or less at equilibrium. So you don't want to see that if you are bullish. And look at what we did here. So we are now at the New York PM session. You are still anticipating higher prices. So any high that was created during or outside the kill zone is your target for your trades that you're going to take during that session. So it starts at 1:30. That's your New York PM, and then finishes or ends at 4, right? So you have 1:30 and 4, right? There you go. Then you have 2 to 3, which is a silver bullet hour for PM, right? 2 to 3. You want to find a fair value gap in displacement. That's what a silver bullet is. That's going to give you 10 handles if you're looking at the drawn liquidity or your target. So here you have this buy side liquidity, which is this is New York, this is lunch hour, this is a lunch hour high. So because it was formed during the time of 12 to 1:30, lunch hour high, right? That's your buy side liquidity. And then you have this silver bullet hour. Okay, no, let's just first write this down. Yeah, this is your New York PM session. That's when. Okay, let me write these things down here. This is 1:30 to 4, right? You have your New York PM session. And then this is your silver bullet hour here. 2 to 3, right? The silver bullet hour. So you want to find a fair value gap in displacement here. But you have these PDRs from a hard time frame. You can even take this one here. This is your bullish order block on 5 minute. Let's put this at the center. You want to see how price reacts after hitting this. So when are we hitting this again? This is your silver bullet hour, right? What do we do there? We generate sell side, go up, we take it, bullish market structure shift right there. I like how we traded above the highs here. You can either take this one as your bullish market structure shift. I don't like this one. I like the fact that it closed. This is displacement, and you want to find a fair value gap in displacement. And if you are looking at the time, this is your silver bullet hour. You are anticipating higher prices. There is your fair value gap. This is your first fair value gap, which is your silver bullet for PM. This is nice. Where do you put your stop loss? Below. So here you have this order block as your first line of defense, right? You don't want to see it go below, and you have this fair value gap, second line of defense. You have the main threshold of this candle. So just the low of this would be a good stop loss for this trade, because you already have so many PDRs or so many confluences supporting that are in the line of defense, right? a good hindsight trader, psychiater. I do this thing even on live, bro. Even if I were to just replay this thing and show you exactly how this formed. Let's do that. In fact, I wanna show you how this thing formed. Let's play it at 1x and see if 1x, even 1x is too much. Yeah. No, it's fine. Let's just finish it off. I wanna replay this thing here. I wanna see how fast this was. 0.1. There you go. Okay, I want to look at how we traded above here and made those. Okay, 0.1 is a bit slow. There we go. Bullish market structure shift, fair value gap. Bang! I enter there. A buy. Stop loss below here. Targeting the large hour highs. There we go. Pyramid entry here. Okay, no fair value gap here. Bang. Done. That's how I roll. That's how I fucking roll, guys. That's how I fucking roll, man. This was a beautiful one. Easy fucking target. Easy peasy. Okay, guys, so that's it for today. I think okay, what's happening now? What's happening? There you go. And then yeah, that's it for silver bullet. This is a PM silver bullet. I hope and think that this lesson was very insightful, and if you can just do exactly how I showed you today, I'm telling you, if you can just be patient and wait for these things. Now just go and back and watch this video. I don't know, like many times. I don't know how many times exactly, but just keep on watch this. Let this be your Bible. Every week you must go back to this video and watch it. Do this. Do it exactly how I showed you today. Okay, you don't have to have a bias. Look at the session highs and lows, and then from there you just annotate the times like how I did here. London open, silver bullet, all these things here. You know what to look for during this time. I'm telling you, by the end of the day you'll make your 100k here doing this shit like this here, exactly how I'm showing you here. Okay, if you can just do that, I'm telling you, there is no way you can fail. There is no way you can fail at this. There is no fucking way. I'm telling you. Just be a good student. Listen to what I'm telling you. Listen to what I'm telling. Like, you ask me questions, you do all of that shit. Whatever that's gonna make you learn from me, you do. You know what you are. You know what you are lacking. You know, send me those questions. Send me those messages or emails if you want to. Ask me, how do I overcome this? I'm now here because some of the students, some of you guys, I don't even know what you're struggling with. I'm trying to help. I'm trying to build millionaires in my circle. I want us to be millionaires. Like, I want us to be millionaires, man. I want us to be pushing nice cars. I want us all to be millionaires. And if you guys are doing good, that means I'm also gonna do good, because if I'm surrounded by people who are doing good and who are understanding if you speak the same language and we are having the same goals, and that's what I want, man. That's what I fucking want. So just go to your Nasdaq and then try look for the same things I showed you here, and then you share the screenshots with me, and the group there. Try to look for London, New York AM, and New York PM silver bullets, and you send them to me. Do the same thing for US30 as well. I'll be doing the same thing, but I won't record it. So yeah, this is it. This is it from me today, guys. I hope this lesson was insightful, and yeah, cheers. Until we meet again on the next video. Bye.